With interest rates rising, it's even more important to find investment locations that are affordable, where people don't need to sell even if interest rates go up by 1, 2, 3, 4%, where capital growth is occurring and will continue to occur, and that are positively geared, that are positive cash flow to allow us as investors to hold that property for the long term. We'll be talking about one such location right now. Hang around if you're interested. My name's PK and I help people build passive income and wealth through the Property Investment Accelerator mentorship program using data without needing a $15,000 buyer's agent every single time. And here in this channel, we talk about three things. We talk about property investing, we talk about the economy, and we talk about financial happiness. If you're interested in any one of these three, hit the subscribe button, give this video a thumbs up. I'd super appreciate it. Let's go. So this is from PRD, okay, this is their source, and they've identified Greater Bendigo as one of the most affordable locations still in Victoria. Let's go through some key information, and towards the end of the video, I'll tell you whether you should invest in Bendigo right now or not. All right, so look, the Greater Bendigo LGA or local government area is in central Victoria. It's actually the state's third largest economy. Okay, and look, I'll get to that in a second, but don't discount regional areas, especially not now. Yeah, I've just done a video on how interest rate increase is not going to make a huge difference to many regional locations across Australia. Let's see if this is one that we want to invest in. All right, so it's experienced a 5-year population growth of 6.9%. That's huge, and it has not just been because of COVID, and I'll get to that in a second. This has actually eclipsed Victoria, well, it's eclipsed Melbourne, I should say. And in the September quarter of 2021, it saw an unemployment rate of 3.9%. So what does that mean? It means that it's got a lower unemployment rate than not only the Victorian, but also the Australian average. So it's outperforming by a long way, okay? Over the last 10 years, Bendigo has experienced strong median growth for all property types. Houses are up by 76%, okay, and vacant land up by a similar amount. Okay, so what does that tell us? All of a sudden that tells us that it's not just because of COVID and everyone leaving Melbourne that prices are increasing in this regional area. They've always steadily increased. It's not a bad performance. Of course, we want that to be 100% plus, but it's done pretty well. It's not a dead regional town, okay? And what I want to say here is in December 2021, investors in Greater Bendigo benefited from good yields. Now, this is just the average. We were getting yields around, I would say 6% back in 2017. That came down to about 5% in the last couple of years. Now they're a little bit on the lower side, but you can still find yields in the 4% right there. But obviously, it completely eclipses Melbourne at 2.6%. All right, the average rental growth has been 5.7%. Over that same period. So not only is capital growth occurring, but also rental growth is occurring, which is good. Our passive income is increasing, and vacancy rates are very, very low and just getting lower and lower, okay? And I'll get to a chart of that in a second as well. And what we're seeing here is Greater Bendigo is set to see a total of 1.1 billion, not million, but billion with a B worth of project development commences throughout 2022 with a predominant focus on commercial projects. So predominantly commercial, that's a good sign, okay? We don't just want them all to be residential, that's a supply problem. A key focus on commercial, it signals new businesses, jobs, economic growth, etc., etc. Okay, so what this is saying is Bendigo has been a great economy, the housing market's done terrific, yields have been great, growth has been great, and it's going to carry on. Now, some key statistics for us to assess, this is just skimming the surface, but to assess whether we should be investing here or not. So median value is about 500. Okay, median value is about 500. I remember back in 2017-18, we were buying under 300, under 400. So for mine, it's grown a bit too much for us to say we want to invest here right now. But you can see, relatively speaking, it's still incredibly, incredibly affordable. Okay, The median unit price is 400. Even though that's done okay in the last 10 years, I would stick clear of units in Bendigo. Vacancy is very attractive. Anything less than 2% vacancy rate is good. And obviously there are suburbs in Bendigo where vacancy is less than 0.5, which is even better. Talked about yield before. Like we said, the economy is booming. There's so much development going on. Now, the problem that I have with Bendigo, and look, all the property spruikers out there always tell you where to buy and why to buy and to buy right now. But I'm, me, if you followed me for any amount of time, you know that I just try to be a little bit honest, at least. The thing here in Bendigo is that total dwellings set to commence in 2022 is more than 1,400. Okay, more than 1,400 lots. Okay, and so lots mean they will be developed upon, they will be built upon. So even though there's only 128 dwellings and 18 townhouses, these lots is the problem I have. And what that means is that supply will go up and up, especially in Greater Bendigo. Central Bendigo, you'll be fine, you'll be a little bit insulated, but in Greater Bendigo, that's a problem. Supply is increasing, and even notwithstanding the huge economic powerhouse behind Bendigo, when supply increases by, a certain order of magnitude, that really smolders the fire of capital growth. So this is a reason I would be very tenuous about buying in Bendigo right now, despite population growth being fantastic and continuing to be fantastic. Pop growth is not the only thing that matters in predicting property price growth, as opposed to what every other property expert tells you. Now, check this out, area sales and median value. Now, like I said before, I can say anything I want right now, but we were buying there in 2017. If you're a client, you know that you've bought there in the last 3 years. And you can see that, prices have been steadily increasing. Okay, this is number of sales, and on the right-hand side, there's median price. It was around 300,000, many years ago, and now it's just pipped 500. But we were buying around 2017, 2018, and even as latest as early last year, okay, in Bendigo. You can see that prices went up even before COVID. COVID definitely helped. There's no doubt about that. See that black line? It's just jumped up. Definitely helped, right? But it's not just because of COVID that Bendigo has done well. That's the point that I'm trying to make. It's not like it was a flat town, all of a sudden migration out of Victoria, lockdowns that boosted it. That's not the case. And the vacancy story tells you a similar thing. Okay, vacancy rates were under 2% consistently, this red line, even before COVID. COVID's around here, March 2020, and vacancy rates were, very, very strong. In fact, stronger than metropolitan Melbourne, which is this black line, and they just got better and better. Okay, so what does this tell me about Bendigo? It tells me that long term it's going to do well. In the short term, it will continue to do well. It will withstand most of the higher interest rate pressure because it's so affordable. Yields are still relatively good versus capital cities. However, there are better places to invest because it's grown too much for our liking in the last 3 years. And there's way too much supply, way too many lots, way too many building approvals, way too many house and land packages coming online. A bit like what you saw in Ballarat. Okay, we were buying in Ballarat around 2016 and 17 as well, rode that wave there. And of course, Ballarat's still increasing, but the amount of development that's going around satellite Greater Ballarat means that price growth is now being, I would say, subdued. And when there's a correction, there's always a correction. Property markets always undershoot and overshoot. When there's a correction, it's likely that Ballarat will have a greater correction than other areas around Australia. But that's not coming just yet because it's still relatively affordable, not as affordable as Bendigo, which is better than Ballarat, I would say, in terms of investing right now. But would we invest there? Nah, I think there's better places to park your money. None of this is obviously financial advice, but I hope it allows you to see both the pros, the cons, the overall perspective, holistic picture of how to assess whether a location is good or not. Now, we just skimmed the surface. There are 30, 35 factors that we go through and actually assess using data, but this is just a smidgen of them at a high level. Hopefully this brought you value, okay, especially if you're looking to invest right now. And guys, if it did, hit the subscribe button, turn notification bell on, and to really understand where to invest, where to park your money, especially interstate or remotely, I'll leave some links below to my podcast, to the Facebook group with almost 15,000 people, and obviously to the Property Investment Accelerator. My name's PK. Give it a like. Thank you so much, guys. Hope you have a wonderful week. Catch you later.